Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in on Ride. We don't believe in competition or revenues, and they have Ride coins.
Well, that's fantastic. A really smart decision, young man. We can put that checked and it's gone.
Hey everybody, welcome to the Laughing Stock. You got Ranger Dane here with Johnny. How we doing?
Yeah, I'm doing good. I'm a little bit sick. It has been a very busy week for me, but I'm here. I'm good. I'm enjoying because tonight I'm gonna watch a football game here in my city that I'm very excited about. So, yeah,
Nice.
going great. But I need some of that ride coin though.
Yeah, that ride coin's really working out.
Yeah.
But yeah, big week for China.
Yeah.
I know you said you had stepped away, but it looks like everything in that space has just kind of exploded. I was just saying before, I'm sure Michael Burry is pretty pleased with this week so far.
Yeah, we were talking just before, like, you know, he I haven't seen him on Twitter for a while now, but he has some predictions there that people like to give him some stick about, like, because they think he is too negative to all the environment all the time. But can you really fault him for any of his picks?
No, and you know, no matter what, you come out with more successes than losses, and you're fine in this game. That's the trick. But
Yeah.
I know Baba was up, JD was up, PDD was up. You know, a lot of the bigger names that I know he had positions in, and then a ton of the smaller Chinese names that like you've probably heard of were doing really well, like Neo, LU. I think it's like LX or LH or one of those. UXIN is another one that I've been watching because it's just oh my god, yesterday again it exploded and I was looking at it. I didn't take a position. I kind of considered it just because of the volume and the it looked really good on just technicals alone essentially. And there was a little bit more to that story as well. I wanted to dive in. I have it on my list today to check out, but just a lot of names there that as big investment firms start piling money back into China, these names are going to have a big run up, but probably not for a long time because they're just going to start to reallocate to these positions essentially. I don't know I don't know if there's a big story change. I think China's been trying to put money back into some of these companies to try and bolster things. So I think that's where the pop finally came from, but I'm not 100% sure on the news.
Yeah. How is it going? Are you with this newer strategy with the swing trading and everything? Are you are you more or less careful about foreign risk when you look at the charts now versus when we focused a little bit more on the fundamentals alone?
I would say it's still in the higher risk category. So, for instance, if I was to get into one of these names, in terms of how quick I'll get out of it, like with a stop loss, and also in terms of where I'll start to take potential profits, that will probably remain elevated just because there's a lot of unsure. Like it could come out tomorrow that the Chinese government says something stupid in terms of how it's going to affect the market, and everything collapses. And that can happen in any government. I mean, the Fed could come out tomorrow and say something that like sounds bearish, and all of a sudden everybody will freak out and drop the whole thing by 5% or something stupid. But
Yeah.
it just is what it is. No matter what, it's in the back of my mind. But in general, I think there's other more important factors in these things. And I guess another way I would consider myself hedging risk with like China, for instance, is I'm probably only going to hold one or two stocks. Like let's say on a day there's like yesterday, for instance, like I just named, there was like probably 10 different tickers that were really moving yesterday from this Chinese momentum. I'm only going to pick one or two of those. You know what I mean?
Yeah.
So if it doesn't
Yeah.
work out, it's not like I over allocated to any one thing. Like that's the thing with Burry's thing is, like let's say he was wrong, for instance, and China came out and said something super bearish and all his positions were down again. I mean, that's a risk he takes. I mean, he's obviously a home run swinger, so it doesn't really matter to him, I'm sure. And
No.
if you have a few $100 million, you'll be all right. But
Yeah.
I
Like
guess
to say-
it's something to consider. But I don't know. I guess I weigh it somewhat similarly to how I used to.
Yeah, I think that's how it sounds like, and that's how I think about it also. And I like to go through the filings when Barry and them are filing their portfolio updates and stuff like that. And it was a bit frustrating now to see that he was in so much of the Chinese companies, but because I don't trust my numbers on them, so I and the information is limited and stuff like that, so I couldn't. But I mean, he was in some big names too, though, so it's not like we didn't know some of these companies from before.
Right.
But it didn't give me so much his portfolio last time. But I'm looking forward to the next, and also to see the changes he made in terms of his Chinese companies, because that's going to be interesting to see. If he kept them or if he's out already.
I mean, this would start to be where I could see him at least trimming positions. Not that I know
Yeah,
his,
I agree.
I don't know exactly what his rules are that he follows. I'm sure he has something in his mind on how he kind of handles it. But the one thing I will say is a lot of it to me will be similar. It doesn't really matter what market you're in. They all behave the same way because it's all got humans are involved in it. So,
Yeah.
like, if I'm looking, like I said, at those 10 different companies, the things I'm going to look for is, like, really, really high volume because I want to see institutional buying. If it's a stock that normally trades, let's say, like 50,000 shares a day, so it's pretty low volume, and it trades 500,000, that's a lot, but it's not a lot in the grand scheme of things. Now, if it traded 50,000 and it traded 50 million, then I'm very interested because that means there's really big parties involved. No one's trading 50 million shares. That's a small investor, or very, very few. Even a small investor might buy like 1 million shares or something like that. Or when I'm talking like a big small investor. But if you're seeing that kind of volume, I'd be more interested in the stocks that normally trade, let's say, like 1 million and are up 50 million, because then it's the bigger names are looking at these things and they're putting money into it.
Yeah.
And then also too, like when I look at a company, I mean, is there anything on it? Do I, where's the share? I know share price doesn't necessarily matter, but when it's under $1 and there's risk of delisting and or reverse splits, all these different things that they can do to try and get back above and stay on, those are all areas I start to become hesitant. A lot of times I'll set my screeners to look at stocks that are at least close to $1. Usually towards the start of the day, if I'm going to look for a screen, I'll set it at around like 80 or 90 cents. because I still want it close to $1. I don't want something that's like 30 cents. I'm not. It's too much risk to take on. That stuff can fall apart very quickly. Not to say they don't work out. They work out all the time. Some of them are home runs, but most of them are just garbage. And and like other factors included, that doesn't mean I won't buy it. I'm just saying that's like something I normally won't take that risk on. And and then, like when I'm like at the end of the day and I want to see what moved, I set it at $1. I'm not looking at stuff under $1 because I want to know stuff that's that I'm not worried about delisting essentially. Anything like that. It just, something drops under $1 and they get the delisting warning, that can go down to 50 cents because everyone's like in the question of if it's going to survive or not on, and become delisted. And it's not like it's the end of the world if something becomes delisted even, but it's all like extra risk that starts to build up. It puts downward pressure on the stock price. And that's all market stuff. I know that doesn't really have to do with the fundamentals of the business or anything like that. But one thing I'm really starting to focus on is how the markets themselves work, because I just feel like the more I've focused on both parts, the actual nuances of the market as well as the business itself, it really allows you to, I feel like, better perform. At least for me. Maybe other people don't care and they can just look at the business, but sometimes that's tough for me. So I like to check both.
Yeah. Yeah, and we were talking just before the stream now, like ways to protect the downside and to protect your portfolio. And I think like you need some stuff in place. And we have said this before, that there are some things that we go into with a mindset that this is maybe too much of a risk. And I was actually just checking my tracker sheet before the stream now, and there's already maybe 20 companies there that doesn't exist anymore, or is like has moved to another smaller exchange or something like that. So in the stuff that we deal with, things like this happens all the time, and the risk there is very real.
Yeah. And another thing I've really started to focus on too is when it comes to companies that like don't have strong fundamentals, because a lot of the stuff I look at doesn't always have as strong of fundamentals as I would want them to have. I at least focus on the fact that the company's changing for the better. So for instance, I'm interested in a company, even like let's say you don't have any earnings yet. Okay, that's not good at first, but what are we doing to improve that? And let's say over the past 2 or 3 quarters, earnings are at least becoming more and more positive. Like let's say I look in last year they were down, I don't know, 50 million, and now this year they're down 10 million. Well, to me that's a drastic improvement. That's 80% in the right direction. It's not positive yet, but it's in the right way. And then if you see revenues increasing at the same time, well, now you have something that may become positive. You know what I mean? Like if revenues are close to doubling, it's kind of like this is like with NUTX or NUTX is the ticker. This is the one that value you and I have been talking about for forever. That's one where the revenues have been skyrocketing. It's still not quite profitable yet, but it's growing and it's turning everything around that it could potentially become profitable, and it's at least moving very quickly in the right direction. And that's more the important thing to me. Because to be honest, like looking at PEs and a lot of the metrics, to me, it just doesn't matter. Like who cares what it's trading at? I don't care if something even trades at like 50 times a PE. If it's improving, the growth investors are in it because they'll buy all the way up. They don't care. They just keep buying. If everything keeps looking like it's heading in the right direction, they'll buy. And the chart does this and proves it all the time. I've seen so many value investors say like, oh, you have to sell at this point because once it gets to here, it's too expensive. And the price can double from that point still. And I think there's other things you can look at to follow that price and that stock up. And as long as you set some kind of stop rules, you don't have to worry about the losses. That's the other thing too, is my risk. Like we were talking before, because you were asking a little about my stop losses. And depending on the story and the narrative of it, where I set my stop losses now, that is my risk. I don't have to worry about it. One of the books I've been reading recently kind of said like, a stop loss is really like your insurance policy. And you have to think that like, if a stock drops 10% and that's where your stop loss is and you have to sell for a 10% loss, yeah, that sucks, but that was your insurance. That, and don't get me wrong, sometimes it goes right back up, which sucks, but it doesn't matter. You're making sure that nothing will ever kill you past 10%.
Yeah.
You know what I mean? So it's making sure that you really abide by those rules. That's so far what saved me. This week I had a few big winners and a few big losers. And the thing is those losers, every time I clipped right when I was supposed to, and it saved me from being down because those things kept going down.
Yeah.
And I think one of them went back up, and then of my stuff that's winning, I've kind of held on some of them. I've been playing around with how to trim things. That's the other thing too, because some of the names I get in can pop really fast and then come back down. And I haven't been as picky in terms of following like a true good base that's about to break out and making sure that I'm just going into those stocks. Sometimes I'll buy for other reasons. And in a bunch of the stocks that you and I like, it's more the fundamental story. It's not just looking at the chart, so the chart doesn't quite give a buy yet, which, I'm also learning too. I really have to take the charts into consideration because they really do tell you when something's going to break out. And it more just confirms the fundamental story. That's what I've gotten from the charts. The charts are like, the story comes out and you and I either believe it or don't believe it, but the chart tells you that story is correct or not. That's when it actually forces the breakout. That's when the market actually starts to react to it. Because remember, the chart is always looking backwards. The chart is what the market's doing with that story. And when the chart starts to agree with the story, that's where I become very interested now.
I was going to ask you though, I forgot, in terms of the stop loss and all that stuff, do you, when let's say a stock that you buy in a week, it goes up 20%, do you adjust the stop loss accordingly upwards, or do you just keep it at so if it drops to a losing position, you are out already?
No, I adjust it upwards. So I don't do trailing losses anymore. I don't really worry about a trailing loss. Usually what I do is, let's say a stock's up 20%, okay, from where I bought it. Somewhere around there, my stop loss will be pretty much break even. And the reason why it's break even is because typically I'll sell a chunk of my shares, especially if it's up 20%. I might sell 30 to 50% of my buy at that point, because I'll happily take that as a 20% gain. And then the rest of it is basically I'm gonna let it kind of ride for a while and see where it goes to. And sometimes as MACD starts to turn, sometimes as it approaches a moving average or it breaks down through a moving average, I'll continue to trim more and more as it works its way up. And yeah, I guess it limits somewhat my upside potential too. But it's something I'm working on. I don't have perfectly sound rules right now for how far to ride something up. And that's because I get involved in a lot of different companies and a lot of different spots. I buy for different reasons. So it kind of depends on the stock. So having clear sell rules in terms of the way up, I've been just learning to just kind of take some profits when I can, which then gives you a lot more comfort because, like I said, if I set my stop loss at break even after I sell something, I'm already up and I can't go down from that point, because if it hits my down point, that just breaks even. So like I said, let's say I sold 50% of a stock at 20%, that's a 10% gain on the whole position. If it comes back down to where my break even point is, I sell out and I made 10% on it, but it's guaranteed 10%. Like at that point now it's locked in at 10%. And if the rest of the position goes up 40, 50, 60%, great. And I'll probably continue to trim on big up days from that point. But at least it locks it in. And same idea on the downside, the stop losses protect you from ever going too far down. And, I told you too, I've come to the conclusion that regardless of whether I think my narrative's right in the long run or not, it doesn't matter. You set the stop loss and you get out. And if you see another opportunity that makes you think you should get back in, you go in then.
Yeah.
But you never just hold it anymore. I will never hold something anymore just saying like, oh, I think it's going to come back. I still believe in my story. I'm not doing that. I've done it before. It's always burnt me. And for a little while with just the fundamentals we had talked about, I had set my stop loss at 10% and it was working super well. I broke that rule with BNED and I got punished heavily for it. And that's why I said BNED's one of those ones that I've learned that you just don't do it. And then the second one that I did it with was with UXIN. And the worst part is both times those ones had points where they were a profit for me. So I went from just like a relatively decent profit to massive losses on those two. And, well, actually, UXIN wasn't a massive loss. It was just more of a break even at the end, which, you know, was more just disappointing because it could have been more than that. So it's ways of guaranteeing that I'm making sure I'm taking profits as things go along, but really protecting that downside. And I guess traditionally, just because, you know, I read The Intelligent Investor, I'd always thought it in terms of your margin of safety comes from the value side of it. You know, if it gets below a certain value point, you know, that's where all of a sudden that's your buy, and you shouldn't have to worry about it. But I've learned that that's it doesn't always work for me. I'm better off just setting something that's a true percentage, and then that way too, I can buy something that's not necessarily considered value. Like, I'm okay with buying something that's on a high. Like, I used to never look at stuff that was close to 52-week highs because to me, it had, you know, it's already overdone. And then I go back and look at the charts, and 9 out of the 10 ones that were at 52-week highs continued higher. Yeah. And then I would say like 8 out of the 10 ones that were at 52-week lows continued lower. So why am I only focusing on those ones that are really, really cheap at that point based on, you know, whatever you think? You know, there's a reason that price is down. You know, there's things that have not gone right with that company, that narrative, whatever it is, there's things that have not gone right. And if you're only catching falling knives, that's a really difficult spot to be. And I'm not saying I'm still not interested in those things. I will definitely watch for turnarounds. It happens all the time. But the chart will start to recognize those turnarounds, and that's an easier way for me to screen for those things as they start to turn around versus me just believing in a story and then having to wait for who knows. It could be months, and it could be down another 20% while I'm waiting. And during that time, I could have been investing in all these other things to make money in where there's much easier stories to follow. Yeah. So I don't know. That's where I'm at now, and so far it's been working since I've been doing this. I mean, I think I'm only up like 10% right now for the past little bit. This is currently where I'm at. This week was okay. It wasn't much. Like I said, I had a few winners and a few losers. Upstart right now is the one I'm holding. Mobileye I trimmed a little bit. Lunar is kind of. It's been a gain, but not, I'm up like 10% on it essentially. But that's what I'm saying, like that's 10%. It's been a while. You know, I was hoping last week or whenever I had the stream last that would have worked out better. And maybe it's already priced in. That's the other thing too, is the market might have already priced in if they won that contract. And maybe where it's at it's like $8 or $7 mode. And to me, it doesn't make sense. It should be higher than that, but we'll see. PRGS is I've been trimming as that one's been working out. Rocket Lab's another one that's been working out really well. Applied worked out really well. And that's the thing. All these names have worked out well, but there's ones that didn't. You guys will see in the Discord I posted Poet, ECDA I got stopped out of. ALTO went up, went down, bounced back up, it's back down. So ALTO I just trimmed the position because to me it's not clear enough yet. ALTO will take off at some point. I'm still waiting, but I trimmed ALTO and just took the gain. I might as well just take the gain. Yeah. You know, it's just one of those ones that's bounced around on me, and there's other stuff that at the time that I'm watching that I'm putting my money into. I took a position in ATGL and I literally sold it the same day because it was up like 40% or something stupid. And that helped to offset Poet and ECDA. So, that's what I'm saying is these things measure out. But at least no matter what, like I'm almost up 1% for a week where, I could have been down quite a bit. Yeah. So.
I think you know, in terms of Alto, there's still more than a month till the Q3 report, so there's time there, and it doesn't seem like the price is moving. It has moved up though for a lot of people from, what was it, 130 to 160 where it is now. That's a pretty big gain in a short time. So a lot of people is probably happy if they sell out on that, but I was expecting it to go up to $2, and I still think it can do that before Q3. But my point is just you have still time there to jump back in again if something changes. But then I saw Value was in the Discord, and he asked you about three of the tickers that you mentioned right now. Do you have some comments on those three, just so we can go through them for Value?
Yeah, no, I do. I just wanted to real quickly touch on Alto here. So Alto, this is what I was basically saying. So last time I bought Alto was on this day here, which was in like the $1.40 range, and then I held it through. I sold a little bit on this day here, on this big down day, and then ended up selling the rest around here. So I did take a small profit on it, but in my mind, what I should have done was trimmed on some of these huge up days, which is part of the reason why I'm starting to do that now going forward. And then once again, it broke down. So let's say I had sold like 50% or 75% up here and then just held it for the long run. Like that's still a decent gain in a very short amount of time. And then once again, here it's waiting to break out again. And this is where once again I could take advantage of this. In terms of a chart pattern, it's kind of a double bottom here, but it's not really strong. So I don't really see much of a chart pattern here. This is more just you and I just kind of agree that, and we know the base is around 130, 120. It's not going cheaper than that where it currently stands, not unless something negative was more to come out. So, you know, fundamentally, I find like we're at the actual margin of safety story-wise. But,
and by the way, new article is out on Seeking Alpha on Alto. I just read through it quickly today, and I mean the guy is trying to. I think he. But I talked with you about it, Dane. Like people have different perspective, right? He's obviously talking about things that matter, but I think he's just skipping over or doesn't go too much in depth on all the things that I feel matters for this particular company. And there's some comments also pointing out that he's missing a few things. So, but just for everyone who is involved or interested in Alto, there's a new article that you should read through now. I think it came out yesterday.
Yeah, and just one last thing I wanted to point out. Trust me, I'm keeping a close eye on it because on the weekly chart, we're just kind of waiting for a little bit of a breakout here.
Yeah.
I mean, on this one, it looks good. You know, everything's kind of slowly moving up, but there just hasn't been like a real breakout moment. There was actually a big pop on Thursday. It was up like almost 10%, and then it went back down to like a 5%, and now it's back down. But my point being is it's close. You can see it. The momentum's starting to build here. But you'll see it where you get this week here, and that's where it's going to continue up. It will break out there, but we're just you got to be patient. These things take whiles to develop.
Yeah, and I was about to say also, like I don't know. You know, we have talked about the asset sale and the potential of that. I'm not sure if you. I've never been sure that you're gonna get asset sale before the Q3 report, but to me it seems like, or they have told in clear text, you know, that they are looking to sell them. But my point was, if something like that happened on Monday, that you get an update that they are going to sell the Western assets, you will still have time to jump in here. Even you're going to miss the initial move, but that's gonna send the price way above $2, I think, if that happens. So you will still have time to get some gains, even if you are not involved at this exact moment before the release.
Right. Well, and this is one thing I've been focusing on, and the market tells you when something is moving in the right direction. And for instance, if like you said, let's say on Monday they announced that they're going to sell the Western assets, and you had this massive move almost immediately. Now, if I had gotten in down here, that's great. But there wasn't much necessarily signaling that anything was really changing here. It's just starting to. Now, if I get in somewhere, let's say here, mid-range, because that takes off, I know that is good news, and I buy in somewhere in the middle here. If I can capture from here to here, I'm going to be okay.
That's good, yeah.
If I get in here and instead it just does this for a while and it doesn't really do anything, it's just time that I could have been somewhere else doing something else that's moving at that point. The market
And I
lets
mean,
you know.
doing it in that way also takes off a lot of the risk, because now you have some substantial news to cover up your purchase, you know?
Right. And that's why, you know, like I said, there's thousands of things I can be investing in every day. Why not focus on the ones that have just had great news come out and the whole market is interested in it? Those are the ones that move. And you get this massive move here in the course of a few months. You know, like literally you could have bought from May and then held it till August or July and had a massive price move in 3 months. Well, I guess that's a little over 2-3 months, but that's about 3 months. But whatever. My point being is that, you know, you can capture a big chunk of this move here, and you know, you don't feel like you're waiting around. You know, same thing here. You could have bought in right here and then got, you know, just smoked on it.
Yeah.
You know, because there's you know, there was only bad news that came out at that point. You know, or it wasn't good enough. Essentially, was the market's telling you. And this is why I said, you know, like let's say this started to break out here, and you know, had this down week. It's up and down. Now have this next bad week. This here would be my stop loss. Okay, it would just be like, hey, you know what? You got the timing wrong on this one. It's okay. It's not the end of the world. And look what that saved me from.
Yeah,
you know,
and
because
you can see you can see the same pattern at the other big drop.
Right. And same thing. Let's say here it starts to break out right here again, right? So, you know, maybe you missed this first part up here, and you're thinking that this looks like a kind of one of those like flag type charts. You know, and then you hold it, and once again it starts to break down. It's kind of bouncing around through here. You know, as it starts to break down on one of these days, this week's here, you would get out, and it would save you from that.
It's hard though, Dane, because remember the excitement ahead of that report.
But that's why I'm saying the market tells you here to get out.
Yeah.
Don't, you know, like you have to remember too, and I know we've talked about this a bunch of times, but for instance, every time there's a massive breakout, you see it kind of do this first. Yeah. Someone knows. People know, and like it doesn't matter. The market starts to slowly funnel money into these things every time before there's big news. It always happens. And it is because there's some people who are buying, and I'm sure, you know, no one likes to say it, but there's someone who tells a family member or whoever and is like, yo, you gotta buy right now. And then the next day it has this massive run up. It's just the way it works. But and you can say whatever you want about the charts. I don't care. If you don't believe in it, that's fine. But I'm telling you, I've just seen it over and over and over now, and it's just become a part of my process because it's basically helped me to confirm things. It's helped me to have the confidence to go in, and it helps me to get the confidence to get out because, like I said, I know the story, but the market is what matters, not what my story is. I can be wrong. I can be right or wrong. It doesn't matter. The market will either agree or not, and I have to go with what the market does to me. It's the same thing. Yeah. People say that, you know, a stock is cheap because Mr. Market is offering at a good price. Well, if it's offering it at a good price and I think it's cheap and I take the risk of going in there and it goes up, then I was right. But if it goes back down, then even though Mr. Market was offering at a cheap price, Mr. Market also was wrong in the fact it was going to get cheaper. You have to accept that as both are true facts to me.
And I saw in one of the videos of I think you know the Swedish swing trader Kulla Maggi. Mm-hmm. they have created on a different YouTube channel. I have posted a link to that channel in the Discord. It's in Swedish, a lot of the videos, but they have subtitles in English. So I recommend people who are interested. For people who doesn't know, he's very successful swing trader, and he's like a little bit close to what we are talking about here right now in terms of style. But he has done it for way longer, and he's highly successful at it. But he was saying, like you were saying before, like the markets consist of people, and even the argument that you are competing against bots and algorithms and stuff like that. He was saying, like, yeah, but people are still making those algorithms and bots. So in any way you look at it, it's always going to be people behind it. And you know, we have talked a lot about robots and things maybe pushing the price in a certain direction, but like you are saying here now, like you will always maybe get some hints and pointers towards what's gonna happen and what's really going on. And
Right.
yeah.
Well, and for instance, like we were just talking, we're going to talk about Mobileye Global, and this is one of the ones that you know, on the weekly it's just starting to get there, but you know, I think this chart looks interesting right here because this looks to me, first off, I know people don't care, but it looks like a good cup and handle to me, and it's close to breaking out here. Now it wasn't much of a cup, and we're still on a bit of a downtrend here. But it's working out very well. I think this looks like it's about to break out on this chart. And the actual story here is that Intel was this is kind of spun off from Intel. They have a big ownership in it. They basically came out and said, hey, we're not trimming that. You know, a lot of people were worried that Intel was going to back out of their institutional position here, which would obviously plummet the stock price. But Intel came out and said, hey, we're not. We like our investment. They actually had added to their investment already at one point. So don't get me wrong, there's still some risk in this. The thing that really attracted me to Mobileye, I know, I think this was the one that Value said he was more interested in, is because of the balance sheet. The balance sheet's great. I can pull it up here as we're talking. And you know, sometimes my thesis, it doesn't have to be that in depth. My like I said, my thesis is there was a really good news catalyst in terms of that a lot of the price sell-off had been that Intel was going to back out of this. They decided and have said that they're not going to, and not to say that can't change. You know, it's not one of those things that's like guaranteed per se, but has a clean balance sheet. And then on top of that, I get the chart. To me, it starts to look like it's close to breaking out. So that's all it takes for me. If we go back to the chart here, you know, I start to see this kind of volume. You got 17.5 million and you got 15 million, or you know, 15.0 million is what I was trying to say here. I can't speak. You know, that to me starts to show that, and you have this rising MACD, which means it's people coming into it, not necessarily all coming out. That's part of the reason I pay so much attention to MACD here, is because MACD will show you if the price is appreciating and there's strong volume and MACD is growing, that means people are moving into the stock more so over out of it. You have a news catalyst, and then just on the regular chart here, you get the typical pullback that you do after a nice little run up here. And if this breaks out, which it just did above this part right here, this is all technicals, I know, and I know a lot of people are probably like, what the hell are you talking about? But if it breaks down from this point here and then it's up from its lows, this is your point of consolidation. If this breaks above that point here, this is every technical trader's dream chart. I'm telling you, this is the holy grail setup. This is what everybody looks for. If this breaks out, it leads to huge run-ups, and I can pull up hundreds of charts that show you this has happened in the past. It's very rare that you get, and don't get me wrong, this isn't like the best setup possible, but it is that setup. And you could say what you want. It's a little bit of a flag. I don't care. All the stupid names are dumb. It doesn't matter. But I'm telling you, but this is the thing I've learned about technicals, is it's understanding what this is telling you. It's not the fact that it's a stupid cup and handle, which, by the way, if you don't know what a cup and handle is, hold on, let me draw the stupid cup here. A cup and handle is just, you have this down movement, you have a base here, and then it goes back up to this. This is the cup, and then this is your handle, and you want the handle to pull down a little bit, okay? But what's important here is what this is telling you is that we found a base for the stock prices, and this is your area of support here, okay? As it starts to break out, that means people are taking interest in the stock for some reason, and it's working off its base. Now, what happens is you got a bunch of people who were buying in here, and they held it for this loss, okay? So these guys are down on the position. And you know, you've been there. Everyone's been a bag holder before. And you just say, you know what? If it just gets back to my price, I'll sell out there, right? There's so many people who are like, you know, I'm down 20%. I'll just hold it till I get to that 20%. So this is what happens. All these guys who bought for this entire region here, they're all now at this loss point down here. And a bunch of them sold, but for the few who held and they're holding down here, they're like, you know what? If it just gets back to my price, I'll sell out there. So the price appreciates, and somewhere around here, all these guys are like, you know what? This is my chance. I'll get out now because I'm almost back to break even. I didn't lose much. So you see the price start to creep back down a little bit because that's all those people who were trying to get out. But the news is, and the story is that the only reason this is that is because it's this chunk of people here, this section here, these people, it's them getting out. Once they're out in here, and you see it, that's why there's such massive volume here, because it's all the people who are continuing to buy, but it's all those other people who are selling out because this is their break-even point, and then all of a sudden the volume starts to go down. And that's because the only people that are left now are going to be buyers. And then if you see it break out right here, that means it's only buyers that are left, and it's the same people who were buying this whole time. They just had to get through this section there. And I know this is a million little dumb lines on here, and this is why people do this, but this is what it's telling you, is that there is no more people to sell, and that it's going to break out. And now, like I said, it doesn't always work, but that's what this is. That's what it's telling you, is that's what the market's doing. And if you start to see volume start to creep up on these up days, which you do now, you see 2 days of decent volume, this is prime for breakout. And that's what a cup and handle is. That's why it's an interesting chart position. It has nothing to do with the stupid design of a cup and handle. It's that's what's going on with people who own the stock and are buying into the stock. And if you have a decent news story, or you have a catalyst such as an earnings surprise, any of those kind of things, it's what causes it to break out.
I don't know, then that looks a little bit more like a mug to me instead of a cup.
You can call it a mug, that's fair.
No, I agree, and I think I refer to this guy a lot now, but Kulamagi also goes through those types of pattern, and he has also previously said, like you said, they don't always work, but I think he said he had like a 25% success rate. So you have to expect also that you're going to be wrong on these things, even if they look good, but it's the one that works that you need to be into, and we have talked about this before with position sizing and stuff like that as well. Like you will always find parts of your investment style you need to improve on, right?
Yeah. And this is the thing too. Now, historically, really successful technical investors. Now, they don't really consider themselves technical investors because they look at more important things. But the guys who are really good at trading or swing trading, they're not always looking at a lot of these different companies. They're focused on a little bit more fundamentals, which is actually kind of funny because most people, when you think of traders, you think, oh, they don't care about the fundamentals. That's not what they're focused on. But that is what a lot of those really successful guys are focused on. The most important thing for them is that earnings quarter over quarter are doing well. Annual revenues are increasing. It just goes to show you that the business is doing well, regardless of everything else. It shows you that those numbers are getting better. And, as long as it's in that zone, and then you have one of these good technical setups, that's where those guys make a ton of money. Everyone does it, their own variation of it. But, that's what's going on with Mobileye. PRGS, this was the other one that he had brought up that I've been in. This is let me pull out to. So once again, this is the weekly chart now. You have to back out a little bit because it has a really long handle. We call this whole section here, it's just a long handle, this whole thing here. And it's the same idea though when you zoom out to a weekly chart. And you can see the breakout it had, okay?
Yeah.
So here's the weekly chart. So once again, you have that cup type look to it. And by the way, if you look historically, cup and handles are the most successful technical charts of all of them. So it's always a decent thing to pay attention to. But once again, there's our cup, right? And then we have this pullback. Now it's not a huge pullback, and then you start to watch that base slowly rise up. I mean, you can call it there. And then once again, this would be your point. If it breaks through that point there, that's where the stock will start to take off. And that's because this is the handle breaking out. Once again, you have a lot of people here who had bought at this peak. You know, they start to sell out. A lot of them are the ones who had made gains on this section here. It's a lot of people just buying. It's what happens every time. It pulls back up, and once again, you have it down, but you notice you just have these lower high, or these higher lows essentially each day. It just keeps creeping up, and then finally it will break out. And you know, if you see this pattern on a weekly chart, that should scream to you to start looking at the daily, because once it does this, you're going to get this appreciation here. And this is just another example of it happening and working in real time. You know, this is one, like I said, the past few days. And once again, same thing. You can see here too that it had this initial run up here. I guess you could even argue it got to this point here. So on a weekly chart, this would be your point. You'd want to see a breakthrough. But this is why in after hours, people saw it break down. And look, you can even see, look in terms of support, that this got down to that line there and bounced right off of it. And the reason why is because so many technical traders will set a buy here, that when it gets down to this point during the day, people have set buys at this level. So it just bounces right off of it, because anybody who's like, you know, once it breaks through this level, it will stay above there. They set a bunch of buys right here, and institutions do this. So, and then look at the volume. You know, you can start to see, even on these days, you can start to see that there's a lot of volume coming in, and it means people are starting to buy on these things. Now, the MACD on this one doesn't quite show it as well as like you would hope, but it doesn't matter. That's your breakthrough, and that's why when you see this consolidation and you see this slowly moving up, what you're looking for is this pattern here. And as this consolidates, that's where all of a sudden it becomes more interesting. Qualamaji, or however you say his name, you know, this is what he talks about. Trading B, all those guys who are really successful swing traders, they say this is that pattern you're looking for, is as it starts to approach into this consolidation period, and then it just breaks out every time. And it does, because you have to understand what's going on in the background. It has nothing to do with this stupid chart. It has everything to do with the fact that there's slowly more buyers than sellers, and once it hits a certain point, that means there's just no one left to sell. Everyone at this point knows what's happening. It's, you know, it's interesting, and sometimes it just takes a catalyst. You know, all of a sudden, you know, this day is when Intel released the news that they're like, hey, just so you guys know, we're not selling this. We're happy with this position. And boom, the whole thing, or no, that wasn't that. This was a PRGS. What's going on with PRGS? Sorry, I'm getting confused between all my names here. When was their... They haven't had their earnings yet. This might have just been... What was the news on this one?
Full year outlook, top estimates on Seeking.
Yeah, I was gonna say I gotta go to Seeking, because that's why I still love Seeking, because that's where when I see one of these things take off in the morning like that, I can quickly run here and see what's going on. Oh yeah, okay. This was the article I was going on. Yeah, they had full Q3 update. So yeah, their free cash flow. So they had recently acquired ShareFile, which was why they were down technically. It looked worse on their actual earnings and stuff, but they had paid a bunch for ShareFile. Said more specifically, even though the share file acquisition has not been completed, I estimate that next quarter Progress Software will end with $700 million of net debt, maybe slightly off, but blah, blah, blah. Moving on, another aspect that complicates the bull case is the acquisition of ShareFile has led management to downward revise their free cash flow outlook from 215 to approximately 205. This is why you were starting to see that sell-off. This was the news initially that led to that cup, okay?
Yeah.
But this is where things turn positive again because ShareFile is expected to use up to around $15 million of free cash flow in that first month with their Progress Software. So in fact, management has upward revised their free cash flow targets to now 5 or 10 million. Furthermore, given that the first 9 months of 2024 has already delivered 194 million, that means that fiscal Q4 will deliver only a very small amount of free cash flow, but as noted on the earnings call, this is temporary. Therefore, I suspect that Progress Software enters fiscal 2025, its free cash will be higher than the 205 that it guides for this fiscal year. Not only did he say this, but then management comes out and says they're raising guidance. He's like, I see Progress Software priced at around 11 times next year's free cash flow and with about 25% of its market cap made of its net debt position. So it's 1 to 4 in terms of its stat level. Next year's cash flow is an attractive valuation despite short-term headwinds for ShareFile. Progress has consistently generated strong free cash flow, and once the integration of ShareFile is complete, I expect the company to deliver even stronger results, with potential for its free cash flow to reach 230 million for fiscal 2025 and a solid product portfolio. So these are why all of a sudden these things all kind of come. Management comes out and says, hey, actually, we're expecting a better Q3 than we were expecting. And that was the news that you needed. And like I said, if you had just been following the technicals, you might not understand why this broke out. And this is why there's people who are good technical traders without understanding fundamentals, because they just focused on the fact that this chart showed the breakout. Now, a lot of charts show this. A lot of charts show this breakout, and it doesn't work out. It fails. Good traders are the ones who understand the fundamentals, because they understand here that the story is that this is going to do better than they expect, and it has a better long runway essentially next year. That's why this one's going to stick. This is going to continue up here. Now, you trim as you go up on this position, but this all of a sudden becomes a stock to keep watching, because it can have what's called a high tight flag, which is basically the second leg up from one of these stocks. It has this quick jump. It'll move sideways for a while, and then once again it will break through this point here and move up again. These are all different trading technical charts, but the thing is, if you understand what's going on in the background, it makes more sense and why you should be able to believe in these things. I don't know. Like I said, it's been working fine. That's kind of why I've been interested in these things. But my style has definitely changed to appreciating what's going on, what the market is showing me through the charts, and then understanding what's going on with the business. I really think those two things in tandem are hopefully what will give me my edge over most people.
I remember years ago I was watching some YouTube videos on day trading and stuff like that, and I remember for some reason this is stuck to me, and maybe because it collided a bit with my approach. He was saying like he gave one of the students or whatever it was praise because he answered like, I don't care what's going on with the company, I don't care about the story, I don't care about anything, the chart tells me it's a buy, so I think you are spot on with a lot of these day traders that maybe misses some of these things, will lose their money after the initial pull up, because sometimes things move without substance, but in this case there's some concrete news that you can lay as a foundation to maybe go in with a little bit of a higher conviction that it's not going to drop back again.
Yeah, and for instance, if you're a day trader, let's go to this day here. Now if you're a day trader on this day, this slowly starts to break out here, and a lot of day traders would probably be looking just at the moving averages, and as it starts to break through the 10 and 20 day moving average, that's probably why you had this momentum trade kind of here anyways in the first place. And the stock had just been doing kind of nothing, and this happened on decent volume. It wasn't anything like crazy, but it was decent volume, and you get this big day moving in the right direction. Now this sets up the longer term chart for me. This turns it into a true cup and handle looking chart to me. But and it's not perfect. I mean, it still moves up from there and then breaks back down a little bit. But that run up is what looks good to me. But my point being is you're going to see a lot of momentum and day traders getting in on these days. And there's going to be guys who get kind of screwed on this because they're going to see just this. Like, you have to imagine, like, where this red line is. Imagine that none of this existed. Like, you can't see here. You know, like, this is all you have is this one breakout here. There's a lot of people who will buy this next day and get stopped out because they are just looking at the chart and they're like, oh, looks like a breakout here. You know, this is a good buy for whatever reason they think. And they get stopped out here. And for the ones who don't and stay in it, you know, it just moves sideways for a while. And a lot of those guys will end up just kind of selling out as time goes on. But what they don't realize is that just because this had broken out here, nothing had actually changed. Nothing had changed. The technicals aren't telling you anything changed. The fundamentals aren't telling you anything changed. It just happened to be a day where there's probably just enough buyers after this had sold off so much. You know, it gets to a point where there's not much people left selling. And that's where you start to watch some of these stocks recover. These initial ones to buy on are super difficult to do. You pretty much can only day trade this. And for real day traders, I'm sure some people sold at one of these other moving averages or just held to the end of the day, blah, blah, blah. But you're not going to be able to do much with that. And there's so many times you're going to see this and it's going to get up to this point, and there's going to be people who sell on the 20 and 10-day moving averages and it just goes right back down. So to me, it's really tough. And sure, you could probably zoom in on like an intraday chart. Like when you look at one of these intraday charts, you can be doing the same thing on these, but this is so fast, and it's and like you're basically scalping money on these. You know, like, you know, these guys are buying it like, you know, as it breaks through here, and they're selling as soon as it breaks through here and making 20 cents on a trade. If you're wrong on some of these, you know, you can lose a lot of money in seconds. You know, I'm not interested in doing this. This to me is kind of like ridiculous. Like I just don't care about this kind of trading. To me, there's not much substance there, and I'm not saying you can't get good at it. You can read these charts just like you can read. I mean, you can see cup and handles and these kind of things too. I mean, you can see here too. There's people who probably bought here and rode this up and then sold here somewhere and had hopefully some indicator to get out here. But right here, this is a cup and handle. You know, it cups. It actually is a little high right here. This shouldn't be higher than this point in a cup and handle, a true one. But either way, pulls back down, runs sideways, and then finally breaks out. And on this point, breaks above right here. And that's why you see this jump up here. This is all technicals. This is what people look at. But it doesn't last long. And if you don't get out right here, it comes right back down. You can take a quick loss. And this is over like a half hour. Yeah. You know, so, you know, if you're someone who put $10,000 into this and you're down, you could have lost like $1,000 in a half hour. Like, it's a tough game.
Yeah.
So I'm not into that. I'm not trying to do that. But I'm happy to buy on this day when I see this break out and then ride it for a few days.
Yeah, for sure.
While we're talking about it with ALTO, ALTO has a bit of a cup here, the pullback, and then the breakout. But it's quick and it's short-lived. I think, honestly, with ALTO, what you want to be looking at is more of the weekly chart. And so far, there's nothing here, which sometimes with certain stocks, there's not much chart pattern to go off of. So you have to be patient.
Yeah.
Because this isn't even a double bottom.
No, it's not.
So, but that's why, you know, like, it doesn't, you're not always going to find everything to have a chart pattern. It's just another thing that can help you to believe in buying something.
Yeah.
And what was the other one that he wanted to go over? COM, right?
It was COM, yeah.
Yeah, we'll pull up ComScope. And while I'm just going over charts, we'll just pull up COM as well. Now, COM is a good example of a nice cup and handle here. It did have this day where it popped here, but here's our cup. It moves sideways. It's down from this day, which is this is kind of a crazy chart. You don't usually get quite one of these days, but this would be where you would draw your down signal. You put your up signal somewhere in here, and the point is though, this sets a really high bar to break through, so it makes it tough. This is a tough chart to go off of, and it breaks right back down after that. So what I was more interested in is this section up here. It had broken out again here. It had dipped down to that 20-day moving average and broke back out. And MACD turned positive. And to me, it was riding that Bollinger Band really nicely. So I took this up, and you'll notice I had sold out here on these days where it had pulled back down. So it wasn't that COM necessarily was a long hold, but I'm keeping an eye on it because I still think there's a decent story here.
Yeah. Yeah, he's asking like what's next for them. So that one is more based on the chart then.
Yeah, they entered into the licensing agreement, and it's more just because to me it was more just the overall story as things go on here. I don't think this guy's super bullish on it, but where was the... Yeah, because they had a lot of debt.
Yeah.
I think it was the fact that they had the just that they're selling the businesses, which is helping with the debt scheme, and then the chart on top of it. Honestly, I think that's what got it into me. I don't think it was much more detailed than that. I'll be honest. Like
yeah.
Was there heavy volume the one day? It might have been this day. I can't remember when I first bought it, to be honest. It could have been when MACD first turned positive again, because to me, like I said, on these kind of charts where you see that MACD turn positive, you just have more buyers. And you have this long chart here of it working its way up. A lot of times on these days, if it doesn't really start to break through the moving averages, you can kind of ride these for a while. Different kind of chart, not as technically sound. But once again, this is a good example of if you buy somewhere in here, it's already up. If you set your stop loss, and as it continues up, you don't have to worry about it.
Yeah.
Like I said, my goal going forward is to just make sure that I'm having a few different major indicators, and as well as the chart kind of agreeing with me, and then using my stop losses to guarantee that if I'm wrong, it doesn't kill me.
Yeah.
Like this week, yeah, it's a little disappointing. It's it's not even quite a % gain for me, because like I said, I had some things not work out. But if I was up 1% every week, I'll be okay. I will be more than okay.
I was gonna say, I will argue that's more than okay.
Yeah, I mean, I don't know if I pulled this up on here before, but and not that I really care about Dave Ramsey in terms of, but where's a retirement calculator? Anybody who wants to just do some basic math, I'm 35. Let's say I wanted to retire at 65. I'm just going to make this number up just because I don't want to, it doesn't really matter how much money you have. Let's say you had $1,000 in your account. So this is someone who only has $1,000. And let's say you're going to put $100 in and you were able to get a 50% return per year. You're going to be fine. I mean, the numbers don't matter. It's so arbitrary if you were able to get that kind of percent. So like I said, the style doesn't have to work really well. It doesn't have to. Let's say you only did half that. You're gonna be fine. And this is someone with $1,000 putting $100 in a month, starting later in life. I'm almost 36 now, but my point being is you don't have to go crazy. I think, you know, Johnny and I have said this, the reason why we're developing this style now in our lives with a portfolio is literally, let's say each year I invested $5,000 and 4,000 of it goes into like an S&P account that just accrues my normal 10% or whatever, right? But I have one small account that I put like $1,000 in a year, and I'm playing around just to try and work out a strategy that works like this, where you get like a 25% return or something like that. It doesn't have to work out for that long before it does super well. So it's just my point in case that, like, you know, you can do very well with making 1% a week. You know, that's why people scalp trade. That's why people day trade and scalp, because like I just said, if you're successful at it and you get 1% a week, you're fine. You're going to be fine.
Yeah.
The problem is it's tough to scale up. The reason why I like swing trading is you can swing trade with, you know, with $1,000. You can swing trade with $100 million. It doesn't matter. Like Qualamaji, his accounts were well over 100 million last time I looked.
Yeah, and by the way, he's also honest about like the 2 first years or something when he didn't know what, and he's also saying, making it a point, like, you need time in the market to see these things and to understand these things and to get a feeling of these things. It takes time. And I was going to say, when you put into that calculator also, that wasn't too much money invested if you start with $1,000 and put 100 in, you know, but you have to invest your time into this. There's no other way. There's no way you will succeed if you don't spend the necessary time. I think that's a very important point to understand. But what I was gonna say is, like, he's honest about his 2-3 first years. He almost blew up the whole account. He almost lost everything. And then he started to like really educate himself on how to do this, and it changed. And now he has, well, you know, a picture of him with on the yachts and everything.
Right. And yeah, that's all super important. Like, you know, if you think just getting 0.5% a week, even, which would be the 25%, if you got 0.5% a week, that sounds easy on paper. It is not easy. To get even 0.5% a week is very difficult to do. So it's not like, even though those numbers aren't high, it's not easy to do that, but it's really important you come up with a system that slowly makes money. You don't have to make a lot of money, but you have to slowly keep making money. You have to really limit your losses and make sure that you let your winners at least outpace that. If you do that, if you find any system that works in that direction, you'll be fine. But it's making sure that you do that over time. And, you know, that's why, you know, Johnny and I have always said that each year our goal would be to shoot for 50 to 100%. Now, if we do that, great. If not, it's okay. You know, even if you just were positive for a few years, it doesn't matter. But the goal is to make sure that you really limit those losses. The one thing I really like about the stop loss is that no matter what happens, as long as I have those things set, I don't care what the markets do. The markets, we could turn into a bear market in a week, and things could go down. Let's say, you know, let's say like a major war broke out and everything just collapsed in the course of like a week or two. It doesn't matter, because the stop losses would guarantee that I get out of my positions and protect that capital. So the next time that things turn around, I'll be ready for it.
Yeah.
You know, like people who in some of the financial crises or COVID, for instance, when COVID came in, if you had these things set in place and you lost 8% of your account, that's not a big deal if the stock market drops 50%, and then that's when you're starting to look to get back in. But it's making sure that you have those things in place, because you have to limit the losses. And I've learned I'm going to be wrong. And since I know I'm going to be wrong, you are going to be wrong. Make sure you just have those in place. It's up to you how tight you want to make them. The tighter you make them, the more mistakes you can make, because, you know, if I'm losing 5% each time, it's not the end of the world. You know, I just need one of those to work out. If you're set it at 10, maybe you should be a little more selective, which is more what I'm trying to do. I'm trying to pick some bigger winners. And then that way, like I said, and it also gives me a little bit more breathing room, since I'm buying stuff that tends to move quickly. You know, if it drops a little bit right from when I bought it, it doesn't immediately kick me out. And then in the same day, it could have dropped, you know, let's say it drops 8%, but then goes right back up 20%. You know, that 8% could have just kicked me out. And I know there's a lot of people that if you set like a really strict rule, institutions know this. Institutions love to push the price down like 10% a day to scare off or knock out or get all the people who set their stop losses, and then they buy right back in. So you got to be careful because there's a lot of people who know what you're doing. Like you're talking the computers and stuff. They know what to do. They know how to get people to stop out. You buy something and within, you know, a few minutes it's down 10%. That scares most people out. So they'll do it. They'll do it on purpose. And then all of a sudden you're like, what the hell? I looked back later that day and it's up 30%. So you gotta just realize what's going on in the markets. You're competing with a lot of really intelligent people who have done this for a lot longer and a lot more successfully than you have. There's a
And
reason
are working in teams.
What's up?
And they are working in big teams.
Right. You know, and they do it full time. I mean, this is their job.
Yeah.
You know, this is the thing.
Yeah.
I don't have full time to do this stuff. And I'm sorry to go on these tangents today. I don't know why I'm even talking about all this, but I think it's this is what I've been working on, and you know, so that's why I just want to impress this upon people to, you know, this is some of the stuff I'm using, and so far since I've done it, I've only gone up. So
which is what you want.
Right. So that's like I said, you know, I don't care if I'm killing it. You know, like I said, my other portfolio, I was talking to Johnny before. I had bought that Digi Asia, which I'm still holding some of the position, but it absolutely killed it the past like 2 days, and I still think it has a long way to go up. I didn't put it in this portfolio at the time, so I didn't have any money. Stuff was in other things, which, you know, better or worse, would have been better to have it in this one too, but doesn't matter. But my point being is like that one's up a ton this week. I think that portfolio is up like 10% this week. So you know, it only takes a few things of that. You know, we were just talking what 25% could do to your portfolio over time. You know, I get 10% here and there in some of these other portfolios, or especially in this one. It's only a matter of time before some of these things really work their way out. But yeah, like I said, my big thing going forward is my biggest focus will make sure that if I take losses, I set it in stone, and that nothing kills me.
Yeah. Yeah, and that's also leading me to another important point, I think, but also a dangerous point, because you can't really just blindly follow this. Like, it's important to not give up when you fail in the beginning. And you know, you and I, we have showed on the stream that we lost. For me, it was personally a lot of money on BNED, and we are pushing through it. But the reason I say that this is a dangerous point to follow blindly is because, in addition to not give up, you have to continue to look for ways to improve and to learn from that scenario, and to basically just learn more, you know. And if you don't do that, you should probably give up, you know what I mean?
Right. Yeah, and I know that's easier said than done, but it, I mean, just kind of is what it is. Sorry guys, it's telling me now it says back to excellent collection. Sorry if the stream's been bouncing around here at all.
No. You know, we started to talk shit about the robots again then, so...
God, they always ruin my stream when I do that.
Yeah.
Stupid robots. But yeah, and like I said too, you know, you'll see me get in and out of positions, but a lot of the stocks now that I keep an eye on, that doesn't mean I won't get back into them either. You know, as stuff moves, things change quickly. I'm watching the charts. I'm watching daily volume. Like Givo, for instance, you know, and this is another one of the charts that, you know, when it has this, you just have to, and Givo's in the same idea as ALTO is, you know, but this is one of those, this is a great example of, you know, I got in on Givo on this day here, like literally somewhere in here. And, you know, I trimmed almost every day up just because the moves were massive each day. I'm like, just take gains here. Don't be crazy, you know, like, you know, be smart with your gains. And
And that
once
was
again, now
on
it's starting to
asset
break out.
purchase,
It tapped that 10-day moving average, and it's kept going up. Now, this is a point here where I could consider getting back in. You know, volume's starting to increase. MACD starting to turn back around. Everything looks like it's going up from here. And I don't know what Givo did at the end of the day, but
17.
But I mean, it looks good here again, you know. So who knows? On Monday, I might see it start to pop again, and this means I go back into it. You know, and people can argue, well, why wouldn't you just hold through? Well, you know, if I rode this up and sold most of it out on some of these days, and then I miss this section, I'll be okay. You know.
Yeah.
Even if it kept going up, let's say it doubled again. Like, yeah, it's great that it doubled again, but you're not always going to hit the top.
Yeah.
You know, and there's a ton of times it gets to this day here or something, and then the next day it drops right back down. I mean, same thing here. You know, I could have bought on this day and then thought I'm going to hold it until it gets up, and it came right back down, and it took this whole time. And maybe I sell out here for a loss somewhere. You know, nothing's guaranteed. So, you know, I've learned to just trim my positions. You know, I can take. I mean, don't get me wrong. I think a 10 or 20% gain in a day or two is pretty good.
Yeah. And I didn't catch this. Like I said, I've been very busy this last couple of weeks actually. But especially this week, I've been paying no attention to what's going on in the market. But I see this is the news from 19th of September. And they also announced a sale of approximately 20 million of investment tax credits generated by the GIVO NW Iowa RNG facility under Inflation Reduction Act. So this is what we talk about with ALTO, right?
Yeah.
They are basically first they acquired some stuff, and now they are taking advantage of the tax stuff. So multiple good news in a short span of time, just sending the price up.
Yeah. No, I think it's all important to take in. But and then, you know, I mean, look at some of the Chinese stocks, like even BABA. I mean, this looked great, and you know, we've talked about where breakouts start to occur. Now this one doesn't have. I guess you could call this a cup and handle. We'll go with that again one more time. So here's the initial breakout, right? That causes the first up part, and then here's the actual drawdown. Here's our base, and I guess we could argue it's not the clearest, but let's, you know, just bear with me. You know, this is where it breaks out too, and this is the cup, right? Here's our cup. Now the handle breaks down, and we'll go like, I don't know. I mean, here would be the top of the handle. And this is where it got down to. This is where it consolidates. And on this day, this is where it broke out. And look what it's done since.
Yeah.
And look at if we go to MACD here. So this is like the day I said it broke out. MACD really starts to tell you it's broken out. It's now over your 10 and 20 day moving averages. I mean, and RSI is about to be oversold, which, to be honest, it's actually bullish. I used to think of this as like a negative because so many times it taps here and goes back down. But that's because I didn't realize what's going on in the chart. RSI is great when it's a breakout like this on a real chart, and then you get all this volume. I mean, you see that heavy volume after it's already broken out. That's a huge, huge sign.
Yeah.
And I mean, look at this run up. I mean, and this is on a massive stock, you know?
Yeah,
like
I was about to say, like, massive moves on a massive stock, right?
Yeah, like, I mean, you don't see 50 million volume on a stock that's already, you know, that's priced at like $100.
Yeah.
You know? Like, you know, this is institutions. I'll tell you what, I don't got this much money. I would love to buy 50 million shares of BABA, but, you know, it's just above where I'm at. So
no, I'm gonna spend it on Ride coin.
right into Ride.
Yeah.
Let's pull up Ride, for instance, here. So Ride, great example of why a stop loss is huge. So it starts to break out here, right? We don't have much of a, I guess you could call this a double bottom. It kind of double bottoms here. There's a bottom and there's a little bit lower of a bottom, actually. It kind of lifted from that. And then once again, here's our new little handle, right? They all have these handles. This is your base, and this is that area where it pulls back. So let's get to our crayons. Once again, breaks through on this day, right? So let's say it breaks through on this day, good volume, MACD's going up, we're through the moving averages, this is a signal to buy. Now you ride it up for a few days. Now, this is why you trim on these big up days. You're trimming on these days, and then it has this huge down day. Now, let's say on this second or third day here, and remember, this is like the 5th day of this up move. 1, 2, 3, 4, 5. Typically, these things run about 3 to 5 days. This is what most of the swing traders say. They usually have 3 or 5 huge moving up days. So if you didn't trim on one of those days, that's your bad. You should have trimmed your position just to lock in some of these gains. So let's say on Ride, which this is one that most people got murdered on. You would have raised all the way, let's say you bought on this day at around 12 bucks. You would have rode that for almost a double. And let's say you sold 50% of your position there. And then on this day, it is where you would get stopped out. This is where it would hit your break-even point and you would stop out. This saved you from this.
Yeah.
You went and then look what the stock's done since. I mean, there's nothing here anymore. And this is before a massive kill. This happened with BNED too. We talked about it with BNED. This is why having these things in place are really important. And I don't know if it'll show, because it was more here, but it wouldn't have never told us to buy here. But in here, this is where you and I we missed this crazy move back up before everything went down, and now it's kind of back down here after this massive reverse split. But once again, here it shows the exact same thing. I guess this would be your handle here, even though it's this huge drop down. But on this day, it broke back through this high point here. On this would be your cup. It breaks through here. This is where you could have made massive gains on some of this.
Yeah.
And don't get me wrong, BNED was super risky at the time. I'm not saying we would have gone into it then, but looking back now, this is how I would have played it now. Now I would have saw it break out on this day. And yeah, you might have got stop lossed out on this day. But once again, look at the difference in what you would have lost if you had got stop lossed on those 2 days versus anything else. And to be honest, you wouldn't get stop lossed out on this because this would be the breakout day, and then you would be watching it. The next morning, it started down. So you wouldn't have bought on this day. You never buy the next day on a down day. You have to wait until it appreciates. Now, this day would have been maybe a day that, actually, I guess you would have maybe bought on this day. But this is traders. I mean, this one's tough. Like I said, this isn't a great example. But my point being is we would have never gotten into any of this mess with BNED because this would have told me not to get into it. There's a bunch of reasons why that you wouldn't have got into it here. Yeah, I mean, you could have followed MACD too. If you just bought on MACD, that's cool. MACD would have said to actually buy on this day. And you would have trimmed somewhere on one of these days. It would have got stopped out here, which is fine. And then once again, if it broke through here and you were trading on this positive MACD, you could have followed it up. Like I said, it's not a clean one. It's really ugly. But also, even though it says the stock price was worth 40 or 50 bucks, it wasn't. It was worth pennies. It was worth 13 cents, which is also, I'm not even looking at stocks down in that range anymore.
Yeah.
So my point being is there's a lot of things I've put in place now to not have this happen to me.
Remember that news when it broke the amount of dilution?
Yeah. Well, how much was it? 2.6 billion shares?
Yeah.
I was like, I don't even know what to say about that.
Yeah.
I will never, ever once again assume that they can't do something that's stupid.
Yeah.
That's what I learned from that lesson.
Yeah. They screwed us shareholders at least.
Yeah. So
Anyways.
We didn't even touch fundamentals yet. You want to start going to some stocks?
Yeah, but I think this is what I like though. Like, just doing the stream with you now, I'm you know, paying attention to everything you say about the charts and trying to learn stuff, because you are better than that stuff than I am currently, and you are using it more actively than I do also, because I've spoken about this in the past with the fees and all that stuff that I can't get away from.
Right.
And not only that, but also the amount I'm putting into each trade. So eventually I want to get there where you're talking about now. So even if we haven't done the fundamentals today, I think it's, for me at least, has been good.
Yeah, well, this is something I'd like to bring up. So you're telling me you have fees and stuff, so it's not as easy for you to do some of these swing trades as quickly as I'm doing. So for me, I'm able to look at stuff that's kind of moving quickly in just a day or something and kind of take advantage of that and kind of hop in on one of those faster swings. And it might not be the soundest of companies. You know, I'll do it on biotechs when the news looks really good. I'll do it on smaller companies as earnings and stuff are starting to turn around. Those kind of things are stuff I'll do. When litigation comes against something, I've learned sometimes the news is not as bullish as you'd want. And those are ones that you gotta be really careful on, because the news is good, like, but it doesn't have a lasting effect. And you want something to be more of a fundamental long-term change in a company. If that doesn't really occur, the news will cause a pop, but it will come right back down. It's great for day traders, but for us in the longer term holders, it doesn't mean anything substantially. And you can get burnt on those ones. But for instance, Baba's a big company. This is one that you could hop into and you could ride for the long term. So this would be one where, you know, earnings and stuff is great for this company. You know, like these are big, very successful companies. And we don't have to look at, you know, let's pull up P6. Now P6 is one of those ones that, has really just kind of murdered it in the past month or two or a few months, whatever it's been. And if you look at the weekly chart, now this one didn't have much of a cup and handle. It really had more of the flag one. So this is one where you probably would have got more in on this section because there's no handle. So when there's no handle on these ones, they're really tough. It's really tough to get this initial move. Sometimes you can do it, but P6's numbers came out and they've just been great. Everything's been looking great for the company. And you can see this was trading at $2. It's at $20. It's a 10. It's up 10 times. You know, and if you go back to the daily chart here, let's argue that this creates my next handle here. Okay, now it's not a huge peak or anything like that, and it really trades more flat. It doesn't trade the downwards pattern. The downward patterns are more successful. But if it trades sideways, that's okay. You can use either one. So once again, this is the point we're really looking for it to break out from. And we're waiting for that price to consolidate. Bunch of people bought in. The ones who sold out, you know, these are guys taking profits or whatever. Then all of a sudden it travels sideways because there's not a lot of buying and selling. And then once again, you get just enough people that the buying starts to go up. And this is your buy signal. This is on this one where you get the buy signal. And I mean, just look at what the stock's done since. Now, this was from $5. But I mean, do you really care that you missed this initial $2 or this $3 raise here? Yeah, don't get me wrong. I mean, it would be awesome if you got in on here. And there is a bunch of signals. You know, I've been trying to use MACD and breaking through moving averages because it allows you to catch this initial trade. A lot of the big institutional guys, they wait for this cup and handle. It's more sound. This is like a guarantee when you see this kind of pattern. And I've just pulled up how many examples today of it working. But this initial one that sometimes I use is this MACD breakout. And then as MACD starts to come back down, this is where you can trim your position. So you can catch this initial one and then you wait for the breakout the next time.
Yeah. And when you move sideways there after the big initial bounce up, that's where the volume you see the volume dries up a bit in that period, right?
Yeah, it really
Usually.
dries up, and then
Yeah.
as it starts to break out again here, it's breaking out. And don't get me wrong, it's on really low volume, but it means there's no one selling this.
Yeah.
When you have this low of volume and something's just trickling up, that means no one is selling right now. It's only a few people buying, and they just keep buying it because they like what it looks like. And then finally you see institutionals come in. It's funny because institutions can only buy such a low market cap, such a low stock price essentially. And all of a sudden it hits this point, and now the institutions get involved, and it goes immediately from $8 to $19.
Yeah.
So you don't have to be a quick in and out trader. Like I was just telling you, Johnny, like this one's probably tough for you because this would be more of a faster. Now, don't get me wrong. It's still like 150% gain. So, or 100% gain. Let's say if you bought on this day here, this would be your signal one probably for me to buy. I guess you could argue this on the MACD would make me interested, but this down day I would not buy on. But this day where it really starts to break through, this is the day that would interest me, and I would maybe take a position here.
Yeah.
Well, I'm just making sure. Sorry, guys. It's telling me the stream's not getting enough to. I hope the stream doesn't get killed here. But anyways, all I'm just saying is that you might not be able to get this move here, but you could definitely wait for this move. I mean, even if you waited and you had done this to here, and then this day was like a stop loss or something for you, or I don't know what your sell rules are. But my point being is, you could do really well on something like this, and that's only a month.
Yeah.
You know, in a month time, you go from like a $5 stock to 11. I think you'll be okay with that.
I'm happy with that.
So like I said, you don't have to be like a swing trader where you're trading, you know, for a few days. You can really hold these things for a few months. But if you're going to be holding it for a few months, the fundamentals and the actual story of the business matters a lot more. Because if it's a really poor story, like let's say someone gets awarded a contract and the contract is for like a small amount. Don't get me wrong, that's good for business, but it's not like a big deal in the general term of the company. That's going to lead to one of these quick ones, but it's not this sustained upwards movement. You know, in this sustained upwards movement, this is the one you want.
Yeah.
And I would argue this MACD, this really negative area after this whole uptrend, this is to me where I would become really, I would probably be trimming somewhere in here on this one. Because this is telling me that that we're running out of buyers. There's enough people. No, like there needs to be the next step, either next earnings or something to continue to prove that this is going in the right direction still. You know, and typically what you're looking for is like, you know, big earnings beats, big guidance, those kind of things, you know. You know, a lot of people pointed out the example of like Amazon or Google or some of those companies, Apple. And, you know, Apple went from, you know, the iPhone came out, everyone knew it was a good thing, but the stock price went up, but it didn't go crazy. And it wasn't until all of a sudden that the year over year earnings went from like up 30% to up 80% to up 170%. You know what I mean? You start seeing that's a buy. I mean, that's a buy. You're going to see it on the chart. It'll take off. But those are where those kind of companies, even the big ones, can become super interesting because they can just have massive runs. And then the longer the chart, the better. So like Apple, when we're looking at like a monthly chart, I'd have to go back even further. Here's a nice cup. It starts to break out and then has this crazy run. I guess you could argue this is a good cup here. Breaks out here, massive run. But these are supported by good evidence of the company. This doesn't have to do with just the chart. this is supported by strong fundamentals, as well as the chart agreeing that this is going to break out.
Yeah.
Look at the 20. I mean, it's crazy. There's so many examples of the cup in it breaking out, and then what happens afterwards. I mean, you know, if I was a big institutional investor, you know, these are the kind of companies that you buy and you hold, because until you get these really, really ugly earnings. I mean, you know, I mean, this is obviously done with splits, but this is saying that in 2004, this was worth 60 cents based on the splits.
Yeah.
Now it's worth 227. I mean, this isn't a 20-year period, don't get me wrong, but oh my god, the return on that is astronomical. You know, to be honest, it's funny too, because like you hear about these people who have the coffee cup portfolios where they buy and they just hold it for forever. If you were going to do that and you wanted to really have a ridiculous retirement, you wait until you get one of these companies that has the massive earnings beats and it breaks out on the chart. Those are the ones you put that money in and you just let it sit for a long time, and you don't sell it until that earnings slows down. And Apple's such a great example of it. You know, they had the hot product, they had the iPhone. All of a sudden, the chart and the earnings all agree that it's a buy. And those are the ones that, man, if you just plopped your ass down and held that thing, that's where real money's made. And that's, like I said, that's why I've become so interested in using the charts with the fundamentals. To me, it just makes good sense.
Yeah.
This is the market agreeing with what I'm saying fundamentally. That's all it is.
Yeah. Which gives you more confidence in going in and yeah. And also when you first do that and you see it works, it also gives you confidence to trim on the right signals, you know.
Right. And like I said too, as this portfolio grows, I won't be able to look at a lot of the small cap stuff that I look at now. A lot of the small cap stuff I look at now, it allows me to trade a lot faster. They're much more like liquid at my level. But as you get bigger and bigger, you can't. So you're going to be more looking for those big companies like Apple that has that next product. NVIDIA is a great example that, I mean, this here, this is your cup and handle right here. It breaks out and then it runs from $6 to 30. Once again, you know, and this is where everything breaks down. It rides here, breaks out again. There's a little cup and handle here. This little cup and handle here, it goes from $40 to $140. And this is NVIDIA, one of the largest companies in the world.
Yeah.
So you can do this with big companies too. You know, and then remember, this is all supported by the fundamentals. This is all supported by the earnings and revenue jumps. And then having the hot product of creating GPUs for AI. And, you know, the rest of it, a lot of it's noise. You know, it's a lot of noise. And I'm not saying it's easy to hold through those periods. But the bigger you get, the more particular you have to be about really making sure you're picking sound businesses. And it's kind of funny because I feel like Buffett, if he saw this, he would agree with half the stuff I said. But I think I could show Buffett too that, hey, if you had only focused on this and looked at the charts as well, not only are you always right because Buffett just knows businesses, but the chart agreed with you. And that's why it's funny because, you know, Buffett will say he didn't give a shit about the charts, which, to be honest, with his record, I don't blame him. He understands the businesses. But I'm just saying, for me, I don't always see it like he does. I'm not a genius like Buffett is. So for me, having this along with the fundamentals, to me, works. You know, and it's funny. I mean, look at Com's fundamentals. How often do you look at this, and then you look at a chart, and the chart looks like that?
Yeah, true.
You know what I mean? This is a really good example of something that's essentially looked like it was going to get murdered based on everything here.
Yeah.
but they have a few things going in the right direction. I mean, this is much more of an RK style.
Yeah.
RK looks at this, looks at the massive debt. Most people are probably terrified of this, as they should be. But the company's pulling a few last swings. They're selling some stuff off. They're raising cash to make sure that they're able to get through this next little period. And what's really happening here is it's not that the company's becoming worth more than this. What this chart's telling me is the company has a little bit longer. That's what it's saying.
Yeah.
You know. So, and you know, there's a bunch of examples of cups and handles in here. And if you had bought on these, you would have done pretty well. And this is a few days. I mean, this is a few days to 2 weeks each time.
It's very interesting, and I was gonna ask you earlier if you you know, you have these websites that are tracking social sentiment and stuff like that. I just look at them every now and then, but you don't really have to, because the chart does that, right? The chart shows you the momentum and shows you this social sentiment and that people are involved, and it can even do it in a lesser scale on heaps of tickers that doesn't pop up in those screeners, because it's not enough people paying attention, but it's enough to move the price, you know. So the chart does everything for you.
Right, and that's why I started screening a lot more by charts than by the fundamentals, because like I can go to my daily movers here, and I can pan through a lot of this stuff, and some of it matters. You know, I think price to sales is really good indication of which is crazy because it's just price to sales, which tells you very little about the business and its actual earnings potential. But iHeart is a great example, and I mean the iHeart chart. You know, granted we're coming off bottoms, but it's been successful in this last little bit here, and there's been some cups and handles in here where you were able to take advantage of a swing trade. In the long run, is this a sound great company? No. But it allows you to take advantage of some of these positions where iHeart might not necessarily be one I was interested in, but you could make a really good move. This went from $1.30 to $1.80 in a week or two. It's tough. It's all over the place. But I'm just saying, you know, I might look at this chart and be like, you know, like this breakout right here. MACD hasn't turned around, and it's really been going up and down. So I'm gonna need a bigger breakout. But if it has one, it allows you to look at it, and that's on companies that aren't necessarily that sound. You know what I mean?
Yeah.
But it also lets me know that, hey, if you're gonna get interested in this one, there's high risk, and definitely set a tighter stop loss on this. Because either you're gonna be right and it breaks out, or you're wrong and it's gonna trade sideways or down from there. So I don't know. Just it's just stuff I've been working on.
Yeah.
You know, UXIN, I pulled this in, and I know we didn't get to it yet, but
I was gonna ask you though about the SSRM chart, because I was pulling it up while you were speaking here, and I know we have gone through some of these charts with a bigger drops and stuff like that, but
SSRM's just tough because it's a pretty choppy chart.
Yeah, that was what I was gonna say. It's like I don't see any clear patterns there yet, but it is moving upwards though.
I will say the only pattern that I really see here is this. To me, looks like a high tight flag. You have this really good move up, and it's been creeping up. The only thing with a high tight flag though is you'd want one higher day here. This does kind of look like it's broken out, but you've seen too, this kind of looked like a high tight flag, and then it failed. High tight, a little bit, failed. So, you know, I also, like, say I look at this chart, I'm going to look back and be like, well, you know what? This kind of looks like the past few times it's never worked. So for me, if this is going to break out, I want something really positive. Either there's going to be,
Yeah.
and I know SSRM just reopened one of their mines, and they're going to work on
Yeah, they
reopening
did.
their bigger mine. But like, and to be honest, this is bouncing around too because commodity prices, gold is kind of hot right now.
Yeah.
So, but that's the thing. Like, I can look at this real quick, Johnny, and be like, you know what? To be honest, like, it looks okay, but I don't see much here.
Yeah.
So for me, I'm probably not going to use the chart too much. And what I'm going to do is I'm going to wait. I want to see some kind of news come out about SSRM that breaks through here. And don't get me wrong. You know, I talked about where I see the MACD breakouts. You still could have bought on this day here where it broke through, and you could have been holding it since.
Yeah.
But, you know, I would also recommend on this, you start trimming because you don't know what this is going to do. It could have this day tomorrow.
Yeah. But I use those indicators, the MACD in August there, because I entered like around 450. And they have been accurate then. Okay, they had a fall, you know, but I'm up like, what is it, 25% something?
Yeah. And to be honest, I mean, this is a really sharp V. So a lot of people say these are really tough ones to use because it's not a true cup. You need a solid base down here to be able to consider it a real cup and handle. But this one, it gets up and then it breaks back down, and then this is where technically I guess you could call this a handle, and it breaks through there. So that in general looks bullish, but you've seen it struggle to do much with it.
Yeah.
So that's another thing
I
too. The technical guys will say on a chart like this where it's not a really obvious chart signal, you typically don't have strong breakouts. It might work in your favor, but it's not going to be that typical, you know, where it just skyrockets up. You know, there's just not enough people interested in at that point. And I mean, you know what's going on with SSRM. I mean, you know, it got smoked after it lost that bind, and we're just kind of waiting for it to recover and to see where they can get back to.
Yeah, and they have stated that it's going to cost them up to 300 million. So there's a lot of things that are known, you know. But then the question is, will they ever be able to get the mine up and running again? But I think the price we're talking about now is, like you said, with the gold being hot, and also that they managed to reopen the other mine that they had to close because of some fires or hurricanes or whatever it was. So it is moving up on some news that is not really the news that I'm waiting for, you know. But let's see how it goes. I have some room here now, so I'm happy with it so far. Even if I agree with you on the chart, that's why I wanted it to bring it up, because I struggle to see a good pattern to follow. But I use the chart to get an entry position here, because you and I pulled it up very closely after the collapse in that Turkish mine happened, and we saw the price was just like plummeting, you know, and it went down to 370 or something, and then it got up a little bit again and fell. So yeah, I just,
But Johnny, this
you know,
is
a lot of
what I
things are
would
known.
say. So for me, I look at that daily chart and it's really tough, right?
Yeah.
So I zoom out here. What looks like to me is this is our base. I'm looking at the weekly chart, right?
Yeah.
So this is going to be a big cup, okay?
Yeah.
Like we're talking, this is more a cup that's going to take months to
I
form.
see what you mean. Yeah.
So let's say we get down here, and let's say some point it starts to swing up to here. If it swings to here, now granted, don't get me wrong, you called the base fine, which, to be honest, most value investors, deep value investors, they're getting in the base. Now, the tough part about bases is bases can collapse further. You know, until it's a solid base, which, to be honest, this starts to look to me like a solid base. It did get down to here, but it's kind of held steady, and it looks like it's starting to slowly creep back up to create the cup. Now, if it creates a handle here and then bounces, somewhere in here is where it's probably going to jump back up to the traditional range. So I can already tell you right now, I bet you that this starts to come around as the company does okay for the next like chunk of time. It pulls back a little bit, and then you'll see it break out. Now, if it never works out, you'll see this break back down, and then instead you'll have that long downward trend. I mean, those are what happens with charts. They, you know, in those long, how many companies have you and I looked at where the charts just in a beeline downwards, and it's, you know, because it's
Yeah.
it's just an ugly company. You know, like it doesn't
Yeah, I
look
mean,
good.
most of the stuff that we screen through looks like that.
Right. And those are all really, really good signals to not buy that company. You know what I mean? It's
Yeah.
like that should tell you that, you know, you're playing with a falling knife. That's what the chart is telling you. That's a falling knife company. And don't get me wrong, those can turn around. But it's tough.
Yeah.
Here's a great example. NUTX. All right. Had this long downtrend for forever, right? Now, this is where it finally broke down and formed a base. And ironically, this is what Value called. Value was interested down here, and he's actually right to do so because this is the base. Now, don't get me wrong, there is bases that have formed before, but like I said, a base can break down. So this is what's risky with value investing and with these companies that are going downwards. Is this looks like a base to me, like, right, here's a little bit, I guess you could say that's kind of a start of a cup, but it failed. So still sticking with our base here, and then it finally failed again. Now, if you were following the fundamentals back here, this would have been screaming to get out. So this is another thing. What got value interested is down here, we're in the base period. This is where management came out and said in Q2 that, hey, our numbers are starting to turn around. And it's funny because they said numbers are starting to turn around, and all of a sudden you watched the stock didn't go up on that news, but at least flattened out. People are like, you know what? I'm going to stop selling here. I'm going to wait. I'm going to see what happens. Now they come out with a good report, and you watched it go back up. And this is that initial price where, like I said, if this pulls back, which it has a little bit, I'm waiting for that next handle to break out here. Because we already have a cup and handle forming here. You can see it on the weekly chart, okay? This is our cup. This is the handle forming. If NUTX continues with good news, you're going to see it jump back up.
Yeah.
It's almost guaranteed to happen. But while it's in this territory here of a falling knife and it has poor, you know, each quarter you watch the news come out. And every time the quarter comes out, the news just is poor and it keeps dropping down. There's reverse splits going on in here. There's a lot going on. But my point being is that, you know, the chart is telling you that along with the fundamentals.
Yeah.
And once again, we'll look to see if this can break out again. Because we definitely have a solid base here. It's early. Don't get me wrong. As I watch some of the swing traders videos and they keep saying it's early, I didn't know why. I didn't know why they were saying that. And why they're saying that is because if this is our peak here, we don't know where this is going. Like, I don't have anywhere to measure this to. I guess I could say this is our line here where it has to break through that point. But this could be my bottom, and it might be somewhere over here in a few more, like a week or two. If it breaks through that, it's very interesting. If it breaks down from here, it means that the confidence isn't there yet. But I guarantee you, we'll be waiting for the next earnings report to see. They had a huge increase in revenues, which is what's caused this big spike here. But can they follow through and actually make the company profitable and have solid earnings? We'll have to see if they can continue to scale in that direction. Value's betting that they do it. The stock, I mean, you know, everyone here is betting that they did do it. I mean, you can see there was a little cup and handle here. It really starts here and kind of goes through here. It's choppy. But once again, broke out from this position here, and that's where you see it start to appreciate. This is probably an even better example of where it really starts to break through. But
also supported by insider buying.
Supported by insider buying, and if you notice, the only time it broke through this 20-day moving average, it started the day below and then ended above, and then it just follows that Bollinger line up. These are all things you and I have talked about that we notice constantly in good trends. And I feel ridiculous now because I'm actually drawing lines on here, and I actually am doing it on purpose. Usually I'm just drawing lines like an idiot. But these lines actually mean something to me now, which is different.
Yeah.
But I appreciate what I've learned. I'm definitely taking it more serious. And the reason why is because I see it work out so many times.
Yeah.
And like I said, this is just humans. This is humans that do this. It's not...
Yeah.
You know, people start to see it. They see the breakouts. People buy in. And don't get me wrong. I think it's really important to know the story. This chart makes a lot more sense when you know what's going on with the company.
Yeah.
It's already 9:30, man. I do probably got to get going here. I'm sorry, guys. We didn't really get to
Yeah.
go through stuff in here. To be honest, a lot of these I was looking at were kind of poor examples. Like some of these don't have a ton of, but they were all interesting. I still want to go through some of these, but
Yeah. And like always, I was gonna say the same. I kind of have to go now, but if we find something on the rest of the weekend, we will post them, post the update on Discord. So come join the Discord if you haven't yet. And I think you, Dane, said that you can't do your stream on Tuesday. Is that right?
yeah, I have to work my regular job late that night, so I will not be on Tuesday. I can't do Monday either, and I don't know. I guess I could do a stream Wednesday, but you're doing Thursday, so I don't know if it really matters.
No, because I think I can do mine on Thursday this time, and then we do a new one on the weekend. I guess 2 streams in a week is still good, right?
Yeah, no, I'm good with that. So yeah, so sorry guys, I won't be on Tuesday, but Johnny will be on Thursday. We'll be on next week, Saturday, I'm assuming. But we'll update. And as always, that's kind of what we were saying though. I feel like the Discord's nice because, you know, in between everything, we can post on there and talk to everybody about what's going on. Sorry if there's a lot of fundamental people that were checking in on this. I'm sorry if the chart stuff kills you. Because I trust me, I was there too. But the more I use it, the more it's just that other half I feel like I was missing.
Yeah, and it's it all matters, right? It's all blending into a decision. So we're not always going to switch over to the charts. We're going to do a lot of fundamental work too, you know.
Yeah, but just know I'm definitely paying attention to the charts now, and in terms of trying to time my buys and exits, I use the chart quite heavily, to be honest.
Yeah.
The thing is when it has one of those breakout patterns, that's like my confirmation that the market agrees with my thesis. Where was BNED?
Yeah.
Let's Is this the daily one? See, the daily one here, like you and I had talked about after everything that's happened, like it just hasn't really gone anywhere. You know, it don't get me wrong, it was down to $6 and it got up to 13, so it did actually double really slowly over time. Well, not really slowly actually. It's only 2 months.
No, yeah.
So either way, don't get me wrong. This might have just been oversold here, and this was people more getting back into the position and stuff. But you can see this is still almost like a long base. Like nothing's really got confirmed here. BNED will become interesting if it really has like a breakout somewhere in here. And
yeah.
And you know, it's tough to say. You know, as a shorter term holder, you know, what do you want to do with this? Do you want to hold it? Do you want to sell it? Do you want to and then longer term investors are probably just accumulating in through here. And now you're watching like a bunch of people saying like, okay, from here, what's going to happen?
Yeah.
So, you know, like I said, it's tough to say sometimes, but and didn't they dilute again? Didn't they have another dilution?
Yeah, I think they did. Yeah.
So, you know, they're still raising money. They're still trying to find like their footing. But really what this chart says to me is, you know, this was overdone after this reverse split. And now people are just kind of in that limbo land. So this to me is kind of like, I'm not looking at this right now.
No.
So
I agree.
And the other thing too, just real quick, did you notice anything insider wise that looked good?
No, PBF, Color Slim is still buying in both Talo and PBF, but this one was way smaller than the other purchases. Still big though, 6 million. But I just like there on the chart, I'm still hesitant.
Yeah.
It's still in that big downtrend.
Yeah. And I mean, like I said, this shows a bunch of examples. There's no bases that form.
Yeah.
So that technically says to wait. Just wait.
Yeah, yeah, no, I agree. I've said this for I think a month now that I'm paying very close attention to PBF, but it just keeps dropping.
Yeah, but this is another thing too. You know, me and you have talked about it. You know, we're looking at literally thousands of stocks. So
Yeah.
this allows me to quickly look at something like this and be like, not yet. Like I don't have to do
Yeah,
any more
yeah.
research. I can quickly look at this and just say, not yet.
Yeah,
You know?
exactly. Yeah.
And like I said, if good news came out tomorrow and PBF had that initial bounce, well, now I'm looking for it to form a base up there. And then the next time
Yeah.
it starts to push through, that's when I'll get in.
Yeah.
But it is what it is. You can't catch them all. It's not. This isn't
No.
Pokemon.
No.
So
I think that's a nice way to end it. And I also think that I will add that quote to our Discord channel where we have the laughing stock wisdom section.
yeah, that's definitely a quote of wisdom. You can't catch them all. That's a myth.
Yeah. Nice.
All right. Yeah. So everyone, John will be on Thursday. What I'll try and do, you know what, Tuesday, I'll try and just keep posting and stuff in the Discord. I'll try and update as much as I can. Sorry
Yeah.
guys, I haven't always. I keep forgetting to update my portfolio. I'm gonna try and do it more often on there.
Yeah. Yeah.
I keep saying that. You know what I got to do is I got to turn notifications back on for Discord because I shut them off because my phone was like going nuts. But I'm kind of like, I kind of like the Discord stuff. Like I don't mind if it's warning me that you guys are posting. So I'm going to turn notifications back on so I know to check. It just will make me check Discord more often. I'm just not in the habit yet of checking it.
Yeah.
And to be honest,
And,
that's like the one social media platform I feel like going forward I'll probably check more often because I find myself
it's
checking
nice.
Twitter and Reddit less and less because it's all just so much nonsense.
Yeah, I agree.
You know?
And it's hard to block it away.
Well, and the other thing that's kind of annoying too is like Twitter and Reddit can really kind of like confirm your biases. You know, like there's a company I like, and then everyone on Reddit's like, yeah, buy. And it's like, you're like, oh yeah, this looks good. But then you get smoked on it, and it's like, you know, I should not have listened to all these idiots on there.
Yeah.
So, all right. I think we'll end it there, guys. Everybody have a good rest of your weekend. And we'll stay in touch on Discord, and John will be on Thursday.
Yeah, sounds good.
All right. Bye, everybody.
Bye bye.